This is the Aurora podcast.
And today we are doing a deep dive into something that frankly sent a bit of a shockwave through the industry.
Yeah, we're looking at the recent Aurora article about the shutdown of DappRadar. And this is, well, it's a big one.
It's a huge one. This isn't just a news obituary for some random company.
No.
DappRadar was, it was a cornerstone of Web3 analytics. Started all the way back in 2018.
So our mission here isn't just to report that they closed, it's to figure out why. We need to unpack how a platform that indexed nearly 100 blockchains and served millions of users couldn't make it work.
Exactly. Because when they shut down after 7 years, citing a financially unsustainable market environment, that raises some really serious questions about the hidden costs of these decentralized ecosystems.
Okay, let's unpack this. So let's just lay out the core facts. DappRadar, a platform that, let's be honest, almost everyone in the space has used at some point, has shut down.
It's a hard stop.
A very hard stop. And the impact is immediate. We're talking over 1 million monthly users.
1 million.
Plus all the developers, all the media outlets, everyone who relied on their data.
And just to be clear, this isn't some kind of pivot or restructuring. They've explicitly confirmed that the core services, blockchain indexing, the analytics, it's all being discontinued.
The tap's been turned off.
Completely.
And the founders, Skirmantas Janushikas and Dragos, they were pretty open about this. They started back in 2018, right around the CryptoKitties craze. Their whole goal was just to help people explore and understand decentralized applications. It came from a place of pure utility.
And that's what makes their statement so powerful. They really stressed that they'd survived everything before this. The bull markets, the bear markets.
They survived the crypto winters.
Exactly. But they said the current environment, the technical and economic reality, made it impossible to continue. It feels like they weren't beaten by the market. They were beaten by the plumbing.
Yeah, you can really feel that in their words. They said they believed they did the right things, that they were a net positive. It doesn't read like a typical business failure. It feels more like a surrender to forces that were just too big to fight. Okay, so that brings us right to the why. They directly blame rising infrastructure costs.
Right.
And my first thought was, okay, their Amazon Web Services bill got too high, but it's so much deeper and more structural than that, isn't it?
Oh, absolutely. This is where it gets really interesting. It's not just a big bill. You could almost call it technical inflation?
Technical inflation. I like that.
To run what they were running, a global analytics operation, you need a massive and constantly increasing investment in storage and compute, and especially in top-tier engineering talent.
And they were tracking, what was the final number?
93 chains.
93. So explain this to me.
No.
Why is going from, say, 10 chains to 93 not just 9 times the cost? Why does it spiral?
Because it's not multiplication. It's a compounding complexity. Every single new chain, whether it's a layer 1 or a layer 2, requires its own bespoke infrastructure.
Got it.
You need dedicated nodes. You need custom data pipelines because they all have different architectures.
Yeah.
You got EVM chains, Solana, Cosmos. They don't talk to each other nicely.
So it's an engineering nightmare.
Non-stop engineering nightmare. Just keeping everything in sync, making sure the data is actually accurate across all these different systems. It just escalates.
It's like a technical tax on every new chain that launches.
That is the perfect way to put it. This whole situation just puts a spotlight on the bigger challenge in blockchain analytics. As the ecosystem gets bigger, more chains, more dApps, more transactions, your operational costs explode. And if your revenue isn't growing at that same exponential rate, you're sunk.
The math just stops working.
The math completely breaks down.
To really get the scale of the hole this leaves, we have to talk about just how big DappRadar was. Before they shut down, they were tracking, over 18,000 dApps?
18,113 to be exact, and serving that million monthly users you mentioned. For so many people, this was the front door to Web3, the first place you'd go for discovery.
It was more than a discovery tool, though. It was a data source. It was cited everywhere.
Oh, constantly. By media, researchers, investors. And this wasn't, a couple of people in a garage.
No, this was a serious operation.
35 employees. A real dedicated team of engineers and analysts.
And they had serious backing. We're talking about institutional money from Prosus, Nordic Ninja VC. These aren't small-time investors. This was capital that believed this was foundational tech.
And that's the scary part, right? Even with that kind of smart, patient money behind you, the underlying economics can still take you out.
You mentioned something earlier I want to circle back to, their clean data mission. Why is that so important?
It's critical. This is what separated them from just a block explorer. They were actively filtering out what they called fake and irrelevant activity.
So like bot traffic and wash trading.
Exactly. Raw on-chain data is messy. It's often polluted with transactions designed to make an app look more popular than it is.
So to provide real market intelligence, you have to clean it.
You have to. And doing that, detecting bots and wash trading in real time across 93 different networks, that requires some seriously sophisticated machine learning models and constant work from your engineers.
So they weren't just paying to store the data, they were paying a fortune to essentially audit it constantly.
They were running a real-time fraud detection system for the entire multi-chain ecosystem.
And now that service, that guarantee of clean data is just gone. That's a huge loss for due diligence. Okay, so the data feed is off. What happens now? I mean, this creates a pretty significant data gap for the whole industry.
It's a huge gap for developers, for researchers, for journalists. Everyone's scrambling.
And it brings up a really tricky question about the other parts of their ecosystem. What about the Radar token and the DappRadar DAO?
That is the million-dollar question, isn't it? The company, the one paying those massive server bills, is gone. But the DAO and the token, in theory, operate independently.
In theory. Can you break down that distinction?
Sure. The operational company is defunct, but the DAO is a separate governance body controlled by token holders, and it has its own treasury.
So it still exists.
It exists, but the founders have said any updates will only come through DAO channels, which leaves token holders kind of in this limbo.
Waiting for some clarity.
Waiting for clarity on what the DAO governs now, how the treasury will be used, and what utility the token even has when the platform it was built around is offline.
Yeah, the token's value was tied directly to the utility of the platform.
And that utility just vanished overnight.
The founders did say they hope new builders will step up and carry the torch forward. But that sounds a bit like wishful thinking, no.
It does, especially since they haven't mentioned anything about open sourcing their code, their APIs, or the historical data sets.
So it's not a handoff, it's a void.
It's a void. And the real so what here is that while the industry needs an alternative, the fundamental problem that sank DappRadar is still there, waiting for the next company that tries.
The cost trap.
The cost trap. This wasn't a failure of vision. It was a failure of the business model for public multi-chain analytics at scale. If you zoom out, if you really connect this to the bigger picture, DappRadar's closure is maybe the most powerful signal we've gotten yet of a fundamental economic problem in Web3.
Which is what?
That building an essential foundational tool, even one with 1 million users and top-tier backing, is no guarantee of success.
Right.
The moment your operational costs, which are tied to the ecosystem's complexity, start growing faster than your revenue, the whole thing just becomes insolvent.
So what does this actually mean for the future of Web3 data? It sounds like the true cost of decentralization, all the fragmentation across all these chains.
It's being paid for by these centralized data providers.
They're the ones footing the bill to clean up the mess.
Exactly. Kind of flips the whole narrative on its head. We always talk about Web3 removing intermediaries and saving costs, but this proves that the complexity creates this brand new, massive, centralized expense.
So the next platform to succeed has to solve that cost problem first.
They have to. Maybe that means focusing on fewer chains or finding some new way to distribute the cost of infrastructure back to the networks themselves. I don't know.
There's a deep irony here. DappRadar's whole mission was to make this chaotic blockchain world simple and understandable. And in the end, that very same chaos and complexity is what killed them. The operational cost of keeping up with it all just became insurmountable.
Yeah, they got caught between the need to be comprehensive and the crushing cost of actually doing it. Hashtag outro.
I think the key lesson from this whole deep dive is pretty clear. Enthusiasm and even widespread utility, they're not enough.
Not even close.
You have to have a sustainable economic model, especially when your costs are tied to the explosive, fragmented growth of the very thing you're trying to track.
The cost of indexing a fragmented world is just proving to be too high for one company to bear.
Which leaves us with a final, pretty unsettling thought for the industry.
Go on.
Given DappRadar's whole clean data mission, their constant work to filter out all the fake activity, who picks up that essential and very expensive job now?
And can they do it without falling into the exact same trap?
That job is now vacant, and the data integrity of the entire ecosystem kind of hangs on that question.
A sobering thought to end on.
We encourage you to subscribe for more deep dives, and for all our featured articles and analysis, be sure to visit blockrora.com.